So when this is where I rely on the technicals. What are the technicals really saying about the market? And I would argue we are in a correction, even though we haven't quite hit that 10% level. I do think we're in a correction for the markets. And I don't have a signal that we've reached bottom yet. Um, there's definitely a rotation happening. If you look at the S&P advanced decline line, it hasn't broken down, and that's one particular sign that's showing the rotation. You're seeing the profit taking in tech and tech related, and it's moving into healthcare and consumer staples. But I don't see those sectors as leadership. I still see tech as being the long-term structural leadership of the market, which makes me fairly confident that we're just in this correction as we have tariff tantrums. We're trying to figure out what DOGE restructuring and the government actually means. So I expect that we can have some volatility within the market for not only the next few weeks, but maybe the next few months as well.
If you believe there's volatility, how much more downside is left? And the reason I ask that, Marianne, is I wonder if you're buying the dip here or if you think you have to wait to buy the dip. How do you play this?
So I always tell people trying to buy the dip, even traders don't get it right all the time. So it's kind of futile. I think you should have what your buy list is. You start dollar cost averaging into your buy list. But as for the downside, everyone's focused on the S&P 200-day moving average. We're pretty much there. You can undercut it and come back, but if we really do undercut it and we can't come back above the 200-day moving average, the next level of support is going to be 5,400. And then the level behind that is 5,200. I'm kind of in the camp that where we are, and I don't have a flush out in the market yet, the risk is that the 200-day moving average is not going to hold. What's really surprised me is that the put to call ratio has not spiked. So that's going to be one of the things that I'm looking for, is for a spike in that put to call ratio and maybe a climactic kind of up move in the VIX index. VIX is already elevated, but you probably need that to spike up a little bit more.
Well, I'm glad you brought up the 200-day moving average, and we have a great chart to show it.
It's beautiful.
It is beautiful. It's got a line on it, and it's got the S&P 500. It's coming up, but we were doing some really light, there it is, novice worth technical analysis yesterday. I know that you spent many, many years in technical analysis. So you mentioned that you think that the S&P 500 could break below the 200-day moving average. I tweeted this chart yesterday. I got a lot of questions to the effect of, do I buy the dip when we get below the 200-day moving average? I mean, if we do break below it, as you think we will, how big is that air pocket that it could create?
I don't think we're in a bear market. I think that's probably what we're all trying to wrestle with. Are we going into a bear market? I don't think we're going into a bear market. I just think this uncertainty has created a cloud over investors, and they're kind of frozen. And I can also understand if some business leaders are holding back on some business decisions until they have more clarity on where we stand on the tariffs. So the air pocket, I don't think is a bear market. I think it's a correction. I'm even a buyer here. I have been a buyer. Again, we're never going to know the exact bottom to buy necessarily, but I think between this level that we're at the 200-day moving average and around 5,400 in that range is going to be the really good buy zone, though, if I was really looking to time it.
All right, I just want to point out that we are looking at stocks that are edging higher here. We were lower at the open, and now the S&P 500 is putting up a gain of 0.1%, so not groundbreaking news. But look, I want to get to you on Bitcoin, Marianne, because not only, well, first of all, you own Bitcoin, we know, because we've asked you about it in the past. But typically, it hasn't been an asset with a lot of fundamental analysis potential. Now you've got, this sovereign crypto fund idea. What do you think that changes in terms of the path of the price? And also, what's your take on the technicals of Bitcoin?
So what I like about the Trump administration talking about creating a crypto reserve, I think that just gives more confidence and more credence to the asset class, that this is an asset class that's not going away. I think that's really important. Bitcoin has been correcting. In fact, most asset classes have been in a corrective phase. So I still think Bitcoin is in a correction, but is in a long-term uptrend. So the worst downside I can get is somewhere around 75,000. I think we got down as low as 78,000 on this pullback. So between 90 and 75, I think we're going to find a footing. And I'm still maintaining my target this year of 113 to 150 on Bitcoin.